Welcome back to Modern Finance. In today's episode, we'll be talking about the Fed and the interest rate hike. So, what happened? Powell opens the door to return to 50 BPS hikes. So, what are the key points? The main US indexes are red. Dow and S&P 500 are down more than 1%. All the S&P 500 sectors decline. The real estate is the weakest group. The Euro Stoxx 600 index is down by 0.8%. The dollar is up, Bitcoin declined, and the crude is off by 3%. US 10-year Treasury yield edges down to 3.96%. Now let's get into details. Remarks by Federal Reserve Chair Jerome Powell on Tuesday opened the door to a return of 50 basis point rate hikes at the Fed's March meeting, if data flow warrants it, according to a note from economists at Morgan Stanley just after the release of Powell's remarks. Powell told U.S. lawmakers in opening remarks at a hearing before the Senate Banking Committee that the Fed will likely need to raise rates more than expected in response to recent strong data and is prepared to move in larger steps if the totality of incoming information suggests tougher measures are needed to control inflation. One key factor for that rate hike outlook might be this Friday's monthly U.S. jobs report. The Morgan Stanley economists wrote, upside surprises to Friday's payroll report could drive a faster and longer tightening cycle. Moreover, they noted that stronger than expected economic data recently suggests that the peak rate of interest rates may be higher than previously anticipated. In a separate note, Mark Hafley, Chief Investment Officer at UBS Global Wealth Management, said uncertainty about the trajectory for inflation, monetary policy, and economic growth could keep the market volatile in the months ahead. The CBOE Volatility Index briefly hit a session low of 18.51 following the release of Powell's comments, but then it began to climb again, and it was last up around 0.4 points at around 19.00. Now let's talk about the stocks. According to CME's FedWatch tool, it is now roughly a coin flip, which is 50% and 50%, as to whether the FOMC raises rates 25 basis points or 50 basis points at the March meeting of the 21st and 22nd day. The main US indexes are lower and all S&P 500 sectors are red. Under the surface, banks are among those groups seeing the sharpest losses. That said, there has been some bounce off the lows. The SPX hit a low of 4,009.53 and now stands around 4,025. Regarding Powell's remarks, Quincy Crosby, Chief Global Strategist at LPL Financial, said, coming into the meeting, it was almost a 30% probability priced in by the futures market for a 50 basis points rate hike. However, Powell makes it clear the Fed would react accordingly if the data suggests that the inflation continues to move in the wrong direction. And you can see the reaction in the equity market. And at this stage, they don't know what the CPI is going to indicate, nor the PPI. And finally, Crosby added, but Powell was matter of fact in that statement. It was very clear to the market that the Fed is not going to equivocate in terms of data that suggests inflation continues to climb higher or remain sticky. And here's a snapshot of where the market stood shortly before 10:30 Eastern Standard Time. So to summarize it, we need to wait for the data and the Fed to take a decision, but know that it's possible for the rate to increase the rates by 50 basis points. But in case you're asking, what does this mean for the crypto market? Let me give you a very, very summarized version of what could happen or what happened last year. When the Fed introduced restrictive monetary policies by increasing rates in 2022, This caused equity markets and cryptocurrencies, because remember, they are correlated now, to appropriately decline in valuation. So if interest rates go up, then crypto is going down, to put it simply. Well, that's all for today. Thank you for watching and see you in the next one. Don't forget to subscribe.